All right. And that way, after this webinar, if there's anything you missed or want to come back to, you will have the recording right in your inbox. All right. Okay. So let's get here. I'm super excited to move on to introducing our speakers for our cash flow webinar. So we've got two really fantastic experts today. And first, I'm thrilled to introduce Beth Dahan. Beth is one of Accion Opportunity Funds, or AOF's business advisors. She has an MBA from Northeastern University, and she's used her own experience as a successful business owner to counsel hundreds of small business owners and everything from starting a business to growing and sustaining a business through difficult times, which is so relatable. I'm super excited to have you here, Beth Ann. Hi.
Hi.
All right. And next, I'm honored to have Shea Taylor with us. Shea is the senior consultant with Chase in Atlanta, Georgia. Shea has over 15 years of experience in financial services, and he provides business coaching to diverse-owned businesses. Shea leverages game theory to help his mentees see the benefit of working on the business, not in the business. And we know him, and we are so appreciative of him as the quintessential banker. So great to have you with us, Shea.
Thank you for having me. 15 years, that shocked me. So
I love that. Time flies, right? All right. So with all that said, I'm actually going to turn it over to Beth Ann to kick us off with what we're going to be doing today and take us through the first part of our presentation.
Great. Thank you so much, Brittany. I'm really excited to be here. Very excited to be presenting with Shea. He is expert in all things banking and finance, so he's going to be a great resource. But I did want to just kick us off with what we're going to be talking about today, what we'll learn. So I'm first going to go through just some kind of best practices for financial management, just what every business needs to know to make sure that your finances are in the best shape. Then we'll go through some cash flow 101. We're concentrating on e-commerce today, but I will say if you're not in e-commerce, these are best practices for any kind of business. So, a lot of great information on that. And then we will move to best practices to improve cash flow, specifically for e-commerce businesses. And I'll turn things over to Shea at that point. And then the value of working capital to smooth out cash flow. So if you're looking for additional working capital for your business. So that is the plan. So we will start off with, like I said, just some best practices for financial management. Of course, any business, needs to make sure that your finances are in order. So I love these two pictures here. You want to be this with everything nice and neat, ready to go, not this poor woman down here who's pulling her hair out with all of her papers everywhere, etc. So what can an organized financial management system do for you and for your business? So frees up time and reduces stress. The last thing you need is more stress when you're running a business. Everyone knows that, there's so much stress around running a business. So if you can at least, organize your finances, that's one less thing off your stress plate, so to speak. If you are organized, you are going to, make sure that your customers pay on time, pay more quickly. So, if you've got your eye on the ball, you will be able to have money coming in more quickly. It also ensures that your vendors get paid on time as well, which is very important because the last thing you want to do is anger your vendors. You rely on them. You want to make sure they get paid on time. So a financial management system is going to help you do that. It makes your financial reporting easier. It simplifies your taxes. So everyone knows, once a year, you've got to file those taxes. If you've got everything in a really great financial management system, that will be, super easy to do. Your financial management, your financial statements are also going to inform any strategic decisions that you need to make. So your balance sheet, looking at your balance sheet, trying to decide whether you're ready to make increased investments or what you need, or if you need to scale back. Those are all really important things. Again, it also can, be a really great tool for attracting lenders and investors. If you need to, attract investment in your business, if you need to apply for a loan, any lender is going to want to see financial statements. So, if you have a great management system, then you'll be able to provide those without any problem. So just, the question is, how do you keep your books? So there are lots of different ways to do this as a small business. And sometimes it depends on, where you are in your business, cycle. So, just a couple ways that you can organize your finances. Obviously, the absolute basic ways to have a paper ledger, although I'm not sure if anybody still does that. With computers, that's probably gone the way of the dinosaurs, but it is still an option. But it's very time consuming and not a great effective way of keeping your books. The next thing that a lot of people might start out with when they're first getting started is just to use Excel spreadsheets or Google Sheets or something along those lines. This is a pretty inexpensive way, sometimes can be free as well if you already have Excel on your computer, but again can be relatively time consuming. It's difficult to generate any kind of financial statements that way, but again, sometimes a way to do it when you're just getting started. Then you have the sort of free or very inexpensive accounting softwares like Wave, FreshBooks, Xero. These can be as little as $15 a month. Some of them are free. I know that Wave, for the most part, is free. The problem with these is, they offer limited support, technical support. If you're really trying to scale your business, they tend to be geared toward, very, very small businesses, and you're not going to have the advanced features. So the next thing is something like QuickBooks. So this QuickBooks, I think, for small businesses is, I would argue is sort of the gold standard of financial software. I know that both small businesses that I have run, we have used QuickBooks. They are, it is a great program. You can have more simple or more advanced versions of it. So it's automated, you have streamlined data entry, you can track your invoices, your orders, your billing, you can generate, lots of great financial reports, and you also have, a lot of technical support from QuickBooks advisors. Disadvantages, it does cost some money, and there is some, a slight learning curve to learning how to sort of get it going. But one of the things I often suggest to businesses, if you're scared of QuickBooks or scared of setting up your chart of accounts, for example, sometimes it's a great idea to, hire a bookkeeper or an accountant to set up your charts of accounts. And then once that is all done, it's very easy to go in and just, do the entries that you need to do. So just a little piece of advice. And then finally, the last way to sort of organize your finances is to actually hire a bookkeeper. Now, this is, obviously a more expensive option, but if it's really something, if financial management and entering things into a program like QuickBooks is just not your thing, or you just absolutely don't have time, then hiring a bookkeeper, can be a great way to go. You're going to get all the same features that you would with something like QuickBooks, but you're going to have a professional this, it depends on how complex your business is. You might only need a bookkeeper to work, a couple hours a week on your business. So a great sort of part-time option. Other businesses would have, more full-time bookkeeper. So those are just some options to think about. Again, really, really important to make sure that you have some kind of system to manage your finances. All right, so we're going to go over just so that the purpose of this webinar is cash flow, to talk about cash flow. So we're just going to go through, a few slides on, what is cash flow? What does that mean? So the basic definition is cash flow is the net amount of cash going in and out of your business during a specific time, for example, in a year. And there are three types of cash flow. So there's operating cash flow. So this is the cash flow that comes in and out as a result of your business activities. So for example, buying products, selling products, any overhead that you might have, rent, payroll, marketing, etc. So these are all things that come in and out of the business just as a matter of running the business on a day-to-day basis. The next type is investing. So these are cash flows as a result of buying and selling your business assets. So for example, if you are buying a piece of machinery, that's cash flow going out. If you are selling a piece of machinery, then that's cash flow coming in. So these are all, investing kind of decisions. And then finally, you have financing cash flow. So this comes from investment into the business, or taking out a loan or a line of credit, or anything like that. So these are the ways that cash flow comes in and out with regard to financing. So the movement of cash flow can be broken down into what's called the cash flow cycle. And this is a very important thing, not only for e-commerce businesses, for anybody, but, if you are an e-commerce business, obviously, the different steps are: you order and purchase a product, that's cash out. The product is shipped, it's received and stored, and then when you sell the product, that's cash in. So it's a pretty pretty basic kind of cycle, and this little diagram shows a little bit more detail on that, but it's pretty basic. Cash out when you order things, cash in when you sell them. So what can a cash flow statement do for your e-commerce business? So understanding the fluctuations of cash is essential to ensuring that you can complete your cash flow cycle and stay profitable. So you need to know how much cash is coming in or going out at any given time. So looking at your cash flow statement gives you that visibility into, where the money is really coming and going. For e-commerce businesses, your cash flow is a fundamental tool to knowing when to purchase new inventory. So you never want to have too much or too little. It's sort of like a Goldilocks situation and the three bears, you have too much, too little, or just enough. So you need to always be looking about, at your cash flow statement to see when you have the money to bring goods in, and how quickly you're going to sell them. Timing is key, especially with a lot of e-commerce businesses. You tend to have a lot of seasonality. So obviously at Christmas, if you're an e-commerce business that really revolves around big seasons like Christmas, then, you're really going to want to be, looking at your cash flow statements and making sure that you have that cash to bring in the inventory at the right time when you need it. All right, so I am now going to turn things over to my co-presenter, Shea, who is going to go through some of the best practices to improve cash flow for your e-commerce business. So over to you, Shea.
Thank you, Beth. Very insightful. I really appreciated breaking down the different levels of reconciling the books. What I'm going to do is go through this part, but I'm gonna put my banker eyes on. So I know a lot of times we get cash flow. We want to have good cash flow because business owners want to be able to tap into lending and things of that nature with institutions. And so one thing I'll kind of start with is cash flow from a bank perspective. And I'm putting my old banker hat on. I reconcile cash flow by what was on the P&L and balance sheet. I never looked at statements or anything. And what Beth was talking about, that was such great advice in giving all the different ways that you can keep the books. Now, I'm an anti-manual person, so I think I would jump in at minimum. For me, would be the wave I think you were supposed to the Wave and the other one. I took a note here. Yeah, Wave and FreshBooks and things of that nature. And I love the idea of having a professional set everything up, because let's be honest, when you're starting a business, you have a lot of expenses. And it's easy for us to sit here and say, hey, get QuickBooks, that's the gold standard, and get started. But if you're starting a business and you have a lot of different expenses, you may be trying to mitigate that. But even if you're using FreshBooks or QuickBooks and you don't have the money for a bookkeeper, at least get with one and pay that one-time fee to have them set everything up. So I'm going to kind of speak through that concept of having good cash flow reconciles to the P&L and balance sheet. And I'll say this last piece, we'll get going. The reason why I'm doing that is because as a banker, the first thing I would ever ask a customer is the P&L and balance sheet. I'm not necessarily concerned about what sales are going to happen in the future. I'm not necessarily concerned about what's flowing through the bank account. From a bank standpoint and having that lending conversation, it starts at the P&L and balance sheet. When I work with my owners, I always say you want to get to a part where you can pull that quick. I can tell the ability of a business owner or entrepreneur is their ability to grab reporting. So with that said, let's get into another ability that helps with the reporting is managing inventory smartly. And in this time, post-COVID has been very unique for a lot of e-commerce businesses, because at one point, stuff was flying off the proverbial shelves, right? And now we've kind of hit a little hiccup in the economy, a change. I would say we're getting back to normal, in my opinion. And so what you're dealing with, a lot of e-commerce businesses are dealing with overstocking of items. They may not have repeat orders in stock. So there are ways you can help for that is, look at product correlation with best-selling products. What else do you need to have in stock? I'm a big advocate for having some type of inventory management system, which sometimes can correlate with your Wave, your QuickBooks, or anything of that nature. So look for ways to correlate that, or maybe make a little time and invest in that. I meet a lot of businesses. A lot of times they have a lot of products on shelves. I had a business 7 years ago. It's very uncomfortable to have all your product under your desk while you're trying to do this, that, and the third, and you start looking at it every day and it's losing value because it's not moving. So what you want to be able to do is, as you're managing that, plan campaigns around what is happening in advance to project that inventory. Understand that supply chain is still, we're kind of getting out of it, but there's a trade hiccup, or trade war, as they would say, with China, and you have different other things. So if you're getting your stuff off the boat or by air, that could be a huge impact to the business. And I've seen that impact businesses where they were getting it by their inventory by air, and it would get here in 7 to 10 days, but by boat, it's 30 to 45 days. And selling on back order consistently, your customers may be fine with it once or twice, but you don't want a reputation that everything is on back order, because then you'll lose sales that way. So it's good that when you have that influx of inventory, plan your campaigns and make sure that you're looking at ways, how do I speed my inventory turnover? So if this campaign, what can I get off from my featured product? Will this enable me to sell it fast so I can put the money into new inventory and grow my revenue and earnings faster? We'll go to that next slide. And so, there we go. So don't overstock, slow moving items. Look at which products get repeat orders. And then, again, correlate your best selling products. The beautiful thing about online and e-commerce is you can grab a lot of data. And we talked a little bit earlier in my bio, talking about working in the business and on the business. What I tell owners, pick that slow day. And I know no day is a slow day, but pick the slowest day out of the slow day. That's relative, right? And take some time to sit down, grab your tea. I was doing administrative before we got on here. Grab your tea, your coffee, sit down and think about the business. Pull your reporting, look at the business. The difference between, I always say, you have hustler, business owner, entrepreneur. And the biggest difference at each level is the ability to look at reporting and the ability to dissect that reporting, make a plan, and take that plan from the paper to the people so you can drive profit. And when you're dealing with the product, it's very important that you're speeding up that turnover, you're flipping that inventory, and you're becoming a kind of a master of your domain when it comes to satisfying your clients, but then also keeping items in stock and helping the business grow. We'll go to the next slide. So, get your money from customers as soon as possible. I think about this and I think about e-commerce. I can't help to think but merchant services. A quality merchant service or credit card processor is what laymen will say. A quality credit card processor is going to be very good because we're going to be, you want to be able to have your customer, you want your customers to be able to pay you. If you've ever been at one of my biggest thing that grinds my gears, if I'm at a restaurant and it's like wonderful service, everything, the food is flowing, it's great, and I'm waiting 30 minutes to pay the people. I'm like, help me help you. I want to pay for this. So your customers, they want your product and they're like trying to pay you. So make it easy for them. And so, for example, make shipping free. Make when paying by card or adding a small handling fee if they choose cash on delivery. Will change their behavior. I don't know too many companies that are doing cash on delivery as much anymore, but I know there are some specialized industries that are still operating like that. So if you are operating like that, understand the industry, your customers' behaving, your buying patterns, so you can be able to capitalize on that as much as you can. Another option is a buy now, pay later apps, because they let customers pay for purchases in installments while you get your money right away. Just be aware of your industry when doing that. That may work in a specialized industry. It may not work for clothing. That may work in other particulars, because at the same time, your job as a business owner is you want to be able to turn the best sale is the cash in hand that day. The first rule of economics, I prefer $1 today than $1 a year from now. So you want to operate like that. But if you're in a specialized industry and you're doing something and that's industry code, then I would make sure that you are working to make sure you're in with industry. And I'll give you a little hack. We go back to bookkeepers and things of that nature. Look at your competitors or your collaborators and see who are they using behind the scenes to help them, and then see if you can get those people's services to help you. So that way you kind of stay abreast of all the trends. We'll go to the next slide. So shorten the amount of time between a business expense and getting paid. So we're still kind of in that processing standpoint. I think is industry standard in e-commerce is you put your credit card in. Laptops and all this, they're storing credit cards. I didn't even know I put it into my laptop yet. So it just makes it easier for me to buy. But for physical products, this means getting inventory off the shelves as soon as possible, as soon as they arrive. If you overstock an item and nobody's buying it, then you're losing money in two ways: lack of sales and payments to stores, those unsold, payment to store those unsold items. Be smart about big orders. A similar problem can crop up with your digital products. So if you make a big investment in advertising around Facebook campaigns, product development, understand it's going to take a while to make a sale off that investment, and you could run into a problem. When I tell owners all the time, what's the biggest thing I used to ask owners, if you get this line of credit or you get this, what are you going to use it for? And the number one thing I hear, which is the completely wrong answer from a banker standpoint, and I never say, don't say marketing. There's no way to get it. Just don't say it. It's like that's almost it's a taboo word to an underwriter. So a little free game for our business owners out there. And you want to ask yourself, if you're thinking I need lending or I need to do money for marketing and marketing runs the sales, you need to understand one thing. Now, we have gotten better in being able to track the ROI of campaigns and things of that nature. But the better tracking is being able to deliver on your customers day in and day out. So just make sure not to over-invest in social media and Facebook, and be very conservative with that, because you don't want to have a bunch of money tied up in product and then a bunch of money tied up in marketing. It leaves you between a rock and a hard space. So we'll go to that next slide.
That was a great tip. You heard it right from the source. Don't say you're going to use your money for marketing.
Yes.
I can't tell you how many clients tell me that's what they want to do with their loan. Now we know right from the source, don't do that.
And Beth, I want to kind of bring you in and just ask, when you think about, when we were talking about e-commerce and we're flowing, and you have we talked about 4 different variables that are at play just in doing a transaction, right? You got not only the checking account, the merchant, the shipping, the order, all these different things here. How do you suggest, I'll go through the slide, but I want to give your opinion first. How do you suggest owners organize all these different patterns and variables that are hitting them at once with one sale times 30.
Well, I mean, it all comes back to financial management, making sure you have everything, in either QuickBooks or have a bookkeeper. You need to be constantly evaluating, your cash flow. And the key to that is, good financial management. So you just have to be super organized.
100%. And so it goes well into our next slide, organizing expenses at a time that works with your revenue pattern. So, I think we all do this maybe in our personal lives, right? If someone gives us options when to pay, I know I'm not the only one thinking, okay, I get paid on this date and this date. I know this check mainly goes to the mortgage or to the rent. You got the car. Okay, I like to get on this date because I'll have more, whatever, and I'll knock that out. So, having that understanding of when you want your expenses to come out. And I would go even a step further, depending on your business. If you could have them come out either on or around the same date, it puts you in the pattern of knowing the ebbs and flows between accounts payable and accounts receivable. And you're able to be a little bit better of a predictor. I understand the variable in that all businesses are in different spaces. So there may be some customers that may have to stretch their expenses out because the pull from Kevin Hart, how my bank account works, I need 3 days to do X, Y, or Z. Understand that, do what you have to do. But as you grow the business, if you can kind of get it mirrored and get it patterned, it's going to help you, because it's going to help you do a couple of things. You'll be able to line up your biggest expenses. You can parallel that with inflows and make sure that you don't dip into the red. And another, just a tip, and I love this tip here. Some suppliers expect a payment within 60 or 90 days. There's no shame in waiting to transfer that payment. If you have a pretty good relationship with certain suppliers, negotiate with them if you need extra time to pay. You can also renegotiate terms that fit your cycle, or pay early if there's a discount that saves money. So a little free game. How do you create cash out of nowhere? And I used to do this when I was a banker, and I would work with a lot of customers in the distribution, wholesaling space. They dealt with ARs and APs all the time. And so one thing you can do as an owner, and Beth talked about this earlier, you want to pay your vendors on time because you want a good reputation. You want to be known as an entrepreneur. You don't want to be the problem child. But when you're paying on time, leverage that, because also there are other people that don't pay on time. You're now a good customer to that vendor. And as you're reallocating and looking at things, if you're looking to grow, I had a business owner one time where I encouraged her, then I had to push her a little bit, but encouraged her to talk to her vendor. And she was on a 60-day accounts payable, this person. She was flipping business. It was going fast. And we had her get her books together. So bookkeeper, they had all that together, and she sat down, she went with a plan. She was getting her payments from her customers in 30 days. What she was selling was something that could have been paid earlier. It wasn't big equipment. We did an AR AP plan. She stretched out her AP from 60 days to 120 days and shortened her accounts payable from 30 to 45 days to on average 15 days. That shot her account balances up about $7,000. And so as a business owner, keep in mind negotiating those terms. You can go back and you can kind of push back and work with those owners around those particular things. We'll go to the next slide.
And I just wanted to jump in here too and say that, I think communication is really key in dealing with vendors. I mean, when I was running my businesses, most of my vendors were also small businesses. And, communicating them, if there was a month that maybe, you were going to be a few days late with a payment, talk to them, let them know what's happening. Don't just be late and not communicate, because we're all small businesses. We're all sort of in the same boat. You have good months and bad months. So communication is really key. Most people will be very understanding if, you just have a tough month and you need a few extra days. So don't be afraid to reach out and communicate, but don't just let things slide. That's the last thing you want to do.
Beth, that's a wonderful call out. And I will add on to that. I echo everything you said. I would add on, it's a little bit different. I am a millennial, so I'm one of the first millennials. You don't have to do it all by email. Sometimes you got to pick up that daggone phone, as my dad would say.
I know I'm not a millennial, so.
I thought you was a millennial, Beth. You're a millennial, right?
No, I'm
Yeah,
old.
okay. I was a millennial. Thought you were just graduated college. Okay. But I tell bankers this. I tell everybody this: when you're dealing with people management, there's something about talking and someone hearing the tone in your voice, the sincerity, and especially if you make good on your word. Don't stay on email and text. You can't discern tone and things of that nature. So I'm a pick up the phone person. I think about that, like even in my relationship with my girlfriend, saying like, hey, I'm busy, I'll be there at 9:30 is a lot different in text than if I say it in a voice app, right? Because Brittany is there laughing. So context
100%. I couldn't agree more.
100%. So you want to have that. So we go to forecasting your cash flow, right? So great call out, Beth. E-commerce business, they're not all about selling, and no business is. You got to think about there are many components of the game. Every business will involve taking care of everything, including your tax payments, wages, salaries, loans, repayments. I call it the things that you have to do because you're in business. They're not the reason why you're in business. And as my dad said sometimes, the administrative separates the sheep from the goat. That you can be a great salesperson, the best campaigns, but if your back office is trash, you will not grow. And it's actually a competitive disadvantage that if your back office, tax payments, things of that nature, payments to vendors, if they're all over the place. Last thought, it is the ultimate expression of professionalism when you have your administrative in order. Because when you pay people on time, you respond to reporting, you respond to your customers, you're putting in platforms that work. Those are things that are done in the dark. And as a human culture, as a human race, there's really no other metric to see how people are thinking when they're not putting on their best. But if your administrative is on point, it is a way to communicate how important the business is to you, how important your relationships are, because you're doing all those things when nobody is looking. And so someone told me that a few years ago, and I've really incorporated. So as an owner, you have to be just as fired up about your administrative, taking care of salaries, loans, taking care of your people, and all the processes. You need to be as fired up and maybe even more than selling a product to a new customer, because that fired up was going to keep you in business longer. Beth, you got something you want to chime in?
Yeah, I just wanted to absolutely agree 100%. And what's interesting is, this can be really hard for people, especially if you're in a creative type of business. So a lot of my clients are, in the food business. So they might be amazing chefs, or they can, bake anything, or they're, making another kind of creative product. And that's where the passion is. But if you don't have the back office and the administrative, stuff locked up tight, your business is not going to succeed. It's as simple as that. And I can't tell you how many chefs I know that, were amazing cooks, but, and tried to open a restaurant, but just didn't have any business sense. So, sometimes you need to bring in some professionals if you need to, if you can afford it. But there are also lots of free resources out there too. But I could not agree with Shea more on that your administrative in your back office needs to be really tight.
Yeah, 100%. And so last part of forecasting, so all this stuff, that tightness is going to help you forecast and look in the future. And it's going to almost feel like you are predicting the future to your competition. A lot of things about business ownership is you don't see your competition. And so I always, in the African, like if the SBA had something, we have like some official reporting and people could see where they're ranked in their industry, I think we'll get a better entrepreneur. But I think entrepreneurs need to know that your competition, your best in your industry, they have their back office tied up tight. And it's every industry. I don't care if it's a barbershop, grocery store, e-commerce, anywhere. And so forecasting can help you plan each of the business expenses accordingly. And so you can stay on top and, take care of all your people. We'll go to the next slide. And so, strategically run those promotions to boost cash flow in the short term. You want to determine, what's most likely to have the lowest sale of items. You want to flip those items, turn those items over. You want to make sure you're planning. You want to run classic sales, physical products, digital products. You want to give discounts when available. And the thing that will help you understand the ebb and flow, because your business does have a level of seasonality, is, again, it goes back to having that good reporting, pulling those metrics, taking that time, whether it's once a quarter, once every 2 weeks. I know even for me at Chase, every third Tuesday, I have a strategy day where I do no meetings, unless somebody from AOF calls me. I'll always do meetings with people at AOF. But I do no meetings, and I'll sit and I'll work on the business. I'm doing all my reporting, all that stuff, and I keep myself ahead of the curve. So just think about those things and think about pulling those items and spending that time is just as important in trying to get another customer. We'll go to the next slide. And so, so I love this one, and I wanted to kind of I was doing some preparation for this today. So your AOV is super important, because if your average customer spends about, in this case, $35, figure out how you can bump that up to 50. For physical products, a simple tactic could be offering free shipping for orders above a certain amount. For digital products, you want to upgrade existing products. But I also think this is good to think about how much of the expense does it take to get that product to the customer. So if something costs $10, let's say you're selling it for $10, it costs $2 to make. There are a lot of other hidden costs that affect your average order value. I don't want you to sell that $10 item knowing you only made it took $2 to make, and you're like, oh, I made $8. I got 80% return. That's not really the truth. You got to think about the shipping, the packaging, all those little soft costs that go in that eat up that bottom line margin. And I think about the thought process of increasing average order value. When I worked with companies that were in the e-commerce space, some of my best entrepreneurs, no matter what size business they were in, they were the ones that always talked about margins. And your average order value is another way to kind of continue to look at those margins. So not only make sure you're getting impact for your order, but also make sure that you are driving a profitable business. Because what I don't want you to do is for that $10 item that you made for $2, I don't want you to find out that it took an additional $6 to get that to the customer, and you're really making $2 for that sale and not the $8. So we'll keep going to the next slide. Reduce unnecessary business overhead. So, look at things that, how can I cut my costs? Assess overheads, create a plan, check in on them, inspect what you expect type thought process. Make sure your utility costs, advertising costs, legal fees, make sure they're low, but also utilize spaces like AOF, because I like Accion because their business coaches are so plugged into the environment. There may be other things out there in your city or municipalities that are offering services that help business owners out. And so I think a lot of times we think about this going at it alone. I'll go back and make a plug for Accion. Is you want to make sure you're working with the business coach, because they're going to know other things that are going out in the city. And there's no guarantee that there's going to be free this, free that. But you never know what leaders come in place, and they want to boost up the activity of business owners. I know right here in Atlanta, we have something right now. If you're in Atlanta proper, you can get services, free marketing services, free bookkeeping services, free CPA services through something that we have called Invest Atlanta. So, you don't have to tackle this alone. And, cutting that cost and having relationships can be good for cutting costs. We'll go to the next slide. The value of working capital to smooth out cash flow. This is really simple, you all. We'll go back one more. Well, I'm sorry. Armed with, you want to have your financial information. Goes back to what Beth said. You got to set this stuff up. If it's not set up, you're going to be flying. You're going to be just flying by the waist, and it's just not. You're going to go wherever the wind blows. Organize how you get your financial information. Bring it through. That is going to be the thing that's going to help inform your decision making. So that way you can feel positive about the working capital you have through cash flow. Or if you need to apply for any lending for additional working capital, you're going to have all the things in place to be able to show a bank not only your profitability, but how you're going to utilize that to grow your business. And we'll go to the next slide. So I'm a big fan of cash flow statements. I think you're going to get these, you're going to see more of these opportunities as you work with bookkeepers. So typically the financial statements you will see or that an owner would typically get are a P&L, a balance sheet, or a statement of cash flow. A lot of my owners, so as a banker, I never really was too concerned about the statement of cash flow, sending it to my underwriter, but I was concerned about it and talk with my business owner because it helped me understand what they were looking at and I can get deeper into business. So statement of cash flows it's a very underrated document, in my opinion. I think a lot of times people care about the P&L and balance sheet, which is very important, but the statement of cash flow is a great internalized document. I want y'all to think about this: P&L, balance sheet, statement of cash flows. Yes, they work in giving them to a bank, but and give them to your CPA to do taxes. But the first person they're supposed to benefit is you, the business owner, because it's giving you all the diagnostics on your business, and it helps you understand what you're going to do before you before you apply for a capital loan or you're talking with a bank. So we'll go to the next slide. And how are we doing on time, Brittany? I want to make sure that we're good. Okay, excellent. So this piece right here, and I wanted to bring Beth in right quick. And, you know, when you think about, you work with a lot of business owners, what are some common sources of, you've got the common sources of working capital here. I want to kind of talk about it through this stage. Say you're an early stage business owner, fresh, just got your EIN, you're feeling good, you know, everything's together, but you're needing your sourcing capital. What do those business owners typically, we'll go through each phase, but what do you typically see them go to access capital at that stage in the game?
Yeah, so, you know, I work with a lot of startup businesses, and unfortunately, you know, there are a lot of lenders who won't lend to startups. So, you know, normally, you know, I will steer them. Obviously, if you have friends and family that can help you front the money, that's always a great way to go. Crowdfunding, different kind of platforms like Kiva and other crowdfunding platforms can be a great way to raise, you know, that startup capital. You know, everyone wants a grant. Unfortunately, those are really hard to come by. But then you also have, you know, community development finance institutions, CDFIs, who, you know, are more, you know, willing to lend to startup businesses, et cetera. So, you know, that's what I typically steer my startup clients towards. And I'm sure you have some great advice too as a banker.
Oh yeah, well, you know, if I can, I always ask, I think I asked this last time, but can I be honest? Can I just be super honest? Here's how I look at startups. It's like being in the 9th grade of high school. No one cares until you get to the 10th grade, right? You're unproven. And I think that bankers don't have that honest conversation with startups. Now, does not mean that there's not a road to success, but I shape it like that because I want you to know as a startup, you're going to feel, that's where you're going to feel pushback the most. It's where you're going to feel it. It's natural. And I think sometimes if you're a new business owner and you're seeing that, you may be on social media and everybody's like, oh, my tribe of people helped me do this and blah, blah, blah. You may internalize that, like, man, everybody's pushing back on me. Trust me, everybody gets pushed back on. You have to create shelf space for yourself. And as Beth said, I would add on to what you said. I think before going in business, I'll even say I would love start a business savings account before you actually operationalize your business. So if you're working, start putting that cash aside. You know, if you can get any type of personal equity injection, that will work as well. I'm a big fan of, and I did this with a customer right now, and they just sold a startup. This sounds kind of weird. A startup sold 30% of their company to a major industry player. And what we did is about 2 years ago, I met with this person and I gave them some advice. And I was like, you know, we're talking about bookkeeping and financial stuff. And I said, look, try to find somebody, a CPA, a bookkeeper that's in their industry, and then work the industry. Come to find out their business, somebody in that industry saw what nobody else saw because they were in the industry. Came in, became a 30% partner, and they had an equity injection. And now they're, you know, pretty soon going to be a six-figure plus business. And so there's many ways to play this game. I think a lot of owners need to kind of sit back and open up. Again, I go to your business coaches here at AOF because, Beth Ann, I'm pretty sure you know many owners. You you met one owner, you met them all, right? And you know other people in the industry that you could get, a business owner could get some good mentorship out of. And, you know, as owners who are growing and they're dominant in their industry, they're always looking to reinvest their money, and they feel like, well, I don't want to go do this or this. I don't know about that. I don't know where to put this. Hey, what's a sure bet that maybe finding someone new in the industry that has a different, they're zagging while everyone's zigging. They can see the opportunity and form that partnership. So I think as a small business, and going back to the 9th grade analogy, you know, that's why you want to get into, you know, school activities and things of that nature. That gets your name out, and, you know, doesn't make you the freshman, avoids you from being put in the locker. I wasn't put in the locker, by the way, but it gives you a better experience. But you have to play this game with people, and it's the ultimate people game.
Well, you do. And one thing that I always advise my startup clients especially is to start to, and as a banker, I'm sure you appreciate this, you know, establish a relationship with your banker. Even if you're not ready to take out a loan right now, make sure they know who you are, what you're doing, how hard you're working. Again, getting back to people, pick up the phone, go in and meet with people in person if you can, and establish those relationships so that when you are ready, you know, to apply for a loan, they know you, and yeah, so
100%. So, but you have small business financing and all that, and, you know, just continue. The key thing is my owners that are already in business. So if I'm taking with my high school analogy, maybe a sophomore or junior, understand that what comes, the bank looks at, and that's all, and this is all life, right? I don't care if you're applying for school, a bank loan, or something else. All big institutions are going to look at you historically. They really don't care about pie in the sky. Beth, and I know you're I didn't go to Harvard, but my little sister went to Harvard. She got in Harvard and I didn't. See, I was trying to project to Harvard. I say, no, don't look at what I've done in the past. When I get there, I'm gonna do this, I'm gonna do this, I'm gonna do that. And they said, well, okay, Mr. Taylor. No, my sister had a great path. She had a great history, and she got in that school off history. So business owners understand that concept. Your history is very important, and establishing that will help open doors to the future. So
100%, absolutely.
We'll go to the next slide. So managing cash flow correctly, again, you know, I think I won't beat this dead horse. I think Beth Ann's talked about this. Having that financial management systems, that's going to be your first step into understanding that. If I could give someone the group homework, make sure you have some type of financial management system in place so you can start seeing how your cash is moving, and you can start making plans to manage it correctly. And then also be aware of your business and learn how to master the concept of what is the most valuable things to do, and what's going to drive revenue and help keep revenue. And then that's going to also help you develop additional cash flow strategies where you can align all your money coming in to the money going out. Next slide. So, you know, right here, I think, you know, I know ALF real well, but Beth Ann, I'll bring you in here. I'd love for you to talk about the resources as we kind of get towards the end of this that people can use to take advantage. I'm seeing somebody in chat talk about, hey, I'm from Seattle, Washington. What is a good resource to look at? So
yeah, absolutely. I'm actually going to kick this over to Brittany because she is the expert of all things AOF.
Wonderful. Thank you both. Oh my goodness. I learned so much. I loved just the personalization that was provided in this conversation. Some really, really good tips on relationship building and how that factors into cash flow, because I feel like when it gets to finances, we all feel very, you know, numbers and calculators. You can tell I don't do finances, right? But anyways, and this was just adding in like the relationship factor and how important that is to have along the way. So I really appreciate that. Some really good conversations in the chat, and I really want to take this time to mention again, if you have some questions, we'll probably have a few minutes after I finish my little spiel to ask some questions to Shea and Beth Ann. And so if you have one, please drop it in the chat. But yes, in terms of our resources, we have a lot of resources that you can access completely free. Some like this today, which is the webinar. I mentioned in the chat, but this will be emailed to you. So you will get the recording, you'll get the presentation, you'll get the resources that we talked about. So if you missed anything, or you're just listening in, no worries, you'll have all of that directly to your inbox. We also have a really robust site of educational resources. So now that you've learned cash flow or a little more about cash flow, maybe you have questions about some other things and you want to get some initial information, that is a great resource to go on. You can search it, you can browse some key topics. And then we also have programs that we offer, like this is part of our FedEx Master E-commerce program, but we are able to work with corporate sponsors to provide really great resources for you all. And then the personalized coaching. I know I've been dropping it in like a lot, but we have some coaching. Beth Ann is one of our in-house AOF coaches. So maybe you want some time with Beth Ann. We also have another great coach who I've seen a lot of questions about QuickBooks, who someone who could be a good coach for that as well. And so those resources are completely free. You can go to the site, you can pick what you're looking for and sign up as well. So
yeah, and just a quick,
oh yes,
yeah, just a quick point on the coaching. So we have coaches from all over the country. So if you want to pick somebody that's in your geographic area, you can do that. If you want to pick somebody who has an expertise in a particular area, my personal expertise is food and beverage businesses, but I've worked with all kinds. So definitely take a look at all the different coaches and, pick one that sort of matches your needs.
Wonderful. Thank you, Beth Ann. All right. So I'm going through the questions. We were, you guys were right on the money, because as questions were coming up, they were getting answered. But I know I saw one a little before. So Aisha says she's looking for a one-stop shop platform that offers payroll, booking, and invoicing. So I wanted to ask, do you have any resources, or would you recommend signing up for a coaching session to dive a little deeper? Beth Ann, I'll kick that one to you.
So yeah, I mean, definitely sign up for a coaching session if you want to know more about that. But just off the top of my head, I'm pretty sure QuickBooks does all of those things. Shea, I don't know if you have more information. I'm pretty sure that QuickBooks can do pretty much everything you need. Now, I will chime in on payroll. I'm a big proponent, if you have more than 1 or 2 employees, a really good source of funds is to actually hire or use a payroll service. When I had my first business, we thought, oh, we can do everything ourselves. We ended up using, a payroll service. It was the best decision I ever made. And because there's a lot of complicated stuff that goes into payroll and withholding taxes, et cetera, et cetera. But Shea, I'd love to hear your advice on that.
Yeah, I was looking. One thing that came to mind, I was like, is there an inexpensive one or and a regular one? So HoneyBook came to mind, but they don't have the payroll. I am agreeing with you. I don't think owners need to do their own payroll. It's I think you service that out. But to your point, QuickBooks does have some type of payroll. And QuickBooks is really, they're kind of trying to become the Amazon. Like I heard they had checking accounts as well, so I was a little nervous for Chase with that. But they do have a payroll service that, and some protection from tax penalties. So with the tax penalty protection, they'll pay up to $25,000 if you receive a penalty, and they have all those other things there. They're trying to chat with me right now that I'm online, and they have 24/7 report and they have auto payroll. So I think QuickBooks may be that one-stop shop. So I agree.
Wonderful. And I know we are right at time. We have one question. That's Kevin. He runs a fermentation business, and it depends on storing physical inventory, leading to generally long cash flow cycles. Can you discuss asset-backed financing or AR financing? Shea, I'll kick that one to you.
That's a Shea.
That's my old world. So I'm going to make a couple assumptions on this question. I'm going to assume one that we're not dealing with perishable goods, so we're dealing with things that can just store for any amount of time. So I'm always a big proponent of, if you're already in business, one, have the conversation with your bank at your banker, and I'll give you a term. you want to ask for the relationship manager at whatever bank you're at. The person in the branch, I come from the branch, I love the branch, but they're not equipped to talk business lending. They're generalists. So when I was in the branch, I could be opening up a high school checking account, a safety security box, or running a deposit. When you're growing like that, you want something in the bank world, they call it a relationship manager. That's the person that can look at to see if you're ready for financing there. That would be my first stop right there. My second stop, I would definitely talk with someone at AOF because they can get you connected to any CDFIs. That stands for Community Development Financial Institutions. What those are, they're non-depository institutions that specialize in lending to business owners, and they have a lesser underwriting requirement than the traditional banks. I always call it like putting floaties on in the pool. They help kind of support you so that way it can get you bank ready. Last but not least, you have that AR financing. Some people call it factoring. That's going to be a little bit more expensive. And asset-based lending depends on whatever the institution. I know this is just Shea's opinion. I think a lot of institutions have left asset-based lending and they'll do it at a higher level. For a smaller business, I think this is too much. It's too much expense to be able to monitor it, work with it. Banks aren't going to want to send people out to monitor a smaller business. They'll typically reserve that for your larger businesses. So what I would do, good sir, is one, I will go to your bank, ask for the relationship manager, have them look at your P&L, tax returns, and all that. See if you can get a traditional line of credit. That's going to be your cheapest amount of money. If you can't do that, you got a CDFI. You can get that information through AOF. Last but not least, you do have factoring and maybe some third-party asset managers, but I do asset lending, but please be aware that's probably your most expensive type of financing.
Amazing. Thank you so much. We are a little over time, but I really appreciate it. I feel like there was so much good information that we're just trying to put in an hour, but we have finished our webinar today. I hope you all found some really, really beneficial information. Please keep an eye in your inbox. All the great resources we talked about today will be coming directly to you. I want to send a huge thanks to Beth Ann and Shea for taking us through this amazing conversation today. And I hope you all feel more prepared to run your business in the future. Thank you all, and we will see you in the next one.
Thanks, everyone. Thanks,
Bye, everybody.
Bye, Shea.
Bye. See you, ladies.